Ethereum is ready for a new all-time high and ready to outperform Bitcoin. While Bitcoin is already reaching new all-time highs almost every single day, we can see that Ethereum is still trading inside of the previous bull market range. We have our range pivot high number 1 over here, range pivot number 2 and pivot number 3 over here. Even have a pivot number 4, and we can see that over here the range levels were getting respected as resistance, as support, resistance, and over here as resistance as well. Now what is very interesting currently is that we can see that after flipping the mid-range, if we zoom in onto the lower time frames over here, we can see that we got a perfect retest of the mid-range, and after we reclaimed the mid-range, after it acted as resistance, resistance, and resistance, we were sending it towards the quarterly level over here. Then around this quarterly level we can see we were hovering around, we were getting a little bit of a flash dump. Now we reclaimed it, and then over here we can see that we sweep the sell-side liquidity. Where does the price bounce from? Exactly, it bounced exactly from that quarterly level of support. Now we know that technically speaking, whenever we look at a range, after a deviation of the range low, which we were seeing over here, if you have an untapped liquidity pool around the range high, and that we do have over here, because we did have these unswept highs over here before we got a drop off to the downside. So we have multiple unswept highs that are providing beautiful buy side liquidity around that higher time frame range high. Then we know that after a deviation of the range low, and we got another one over here, if you manage to flip the mid-range, you should attack the range high liquidity pool. Now we flip the mid-range, and currently as we speak, we are also trying to flip this quarterly level of resistance into support over here, which as long as it should hold, it should send Ethereum towards its range high liquidity pool and potentially even new all-time highs around $5,000. Now you're probably wondering, okay Guru, this is all interesting, right? But how are we going to position ourselves into profiting during this run up for Ethereum? Because if we expect a run up for Ethereum, we need to make sure that obviously we profit from this. I hope you guys have listened to me over the past 1 year or so, and that you guys are positioned in spot, that you guys are positioned into swing longs. If you guys have not yet, then I'm about to discuss a very interestingly looking altcoin that is ready to pump as well, with exact entry point, stop loss, and take profit target. But right now, first, let's discuss Ethereum against Bitcoin to see why Ethereum will start outperforming Bitcoin in the upcoming weeks. So what we see over here is the Ethereum against Bitcoin chart, and the first thing that we have to notice is this higher time frame sweep over here. That higher time frame sweep led into a break of structure to the upside over here on the 3-day time frame. Now this means that a potential reversal is taking place over here. Second thing that we have to notice is that we have a lot of unswept highs over here. We know that these unswept highs are providing buy side liquidity. Now where is this buy side liquidity resting? If we take the range high to the range low over here, or to this range low over here actually, then we can see that buy side liquidity is aligning over here around the range high area over here. And we know that if we deviate beneath the range low and you have an untapped liquidity pool around the range high, then technically speaking you should reverse towards the range high. Now when we look at the reversal structure, we can see that after breaking structure over here, the price retraced back all the way, if we go from swing low to swing high, back towards the discount area. And inside of the discount area, something interesting was going on, because we can see that if we go to the 12-hourly time frame, is that we had a little bit of a local downtrend. We form a low, lower high, lower low, lower high, lower low. Then we form a higher high. Second shift in structure confirmed. Second potential reversal play was confirmed after mitigating the discount area over here. Then after that reversal play, once again we push up. We create relative equal highs over here, engineering some buy side liquidity, and then once again the price retraces back once again in towards the discount area. Inside of the discount area, if we then move to the 4-hourly time frame, we can see once again we had a little bit of a local downtrend, from a low, lower high, lower low, higher high. Once again, third reversal structure being confirmed over here to the upside. Now after the third reversal structure, we can see that we are once again mitigating the discount area over here. Now, what are we currently seeing is that on the 3-day time frame, we sweep high time frame liquidity and then reverse structure to the upside. On the daily time frame, we mitigate the discount, we reverse structure to the upside. On the 4-hourly time frame, we mitigate the discount, we reverse structure to the upside. And right now, after that 4-hour shift, we are potentially doing the same on the 1-hourly time frame, which means that a potential high time frame reversal on Ethereum against the Bitcoin chart is potentially in play. Guys, you can now also trade Woo, Bitcoin and other crypto pairs on PrimeXBT. They are now finally offering crypto futures trading alongside trading commodities, Forex and more. Definitely one of the most trusted exchanges out there. And if you want to sign up, make sure to use a link in the description down below and you will get a 7% deposit bonus. Now, besides the fact that market structure is potentially looking really bullish on Ethereum against Bitcoin, we are also creating a potential diamond reversal pattern over here after a trend to the downside. This is a very classic and not so common reversal pattern that we don't see that often. Now, I think there's just too much buy-side liquidity resting towards the upside. And let's say we take these equal highs over here, these relative equal highs as our first take profit target for Ethereum against Bitcoin. Then we can see that's already an increase of approximately 25%, which means that Ethereum will outperform Bitcoin by 25%, which means that altcoins always follow Ethereum, which means that we should be looking for longs on Ethereum and altcoins. Now you might probably be wondering, okay, Gilbert, why should we focus on Ethereum and altcoins when Bitcoin is this strong? Look at the Bitcoin chart and see for yourself, guys. Bitcoin has seen a huge move to the upside. It has had the biggest chunk of its move probably already. So is the money currently to be earned in Bitcoin, or should money be flowing into Ethereum and altcoins? And I think if you guys are in this space for a longer period of time, you guys already know the answer to this question. And we as traders, we always want to be at an area where there's money to be made. And currently I think the money is to be made with Ethereum and altcoins. So let's dive into the altcoin setup. So the chart that we are looking at over here is GMT, and GMT is seeing a very clean high time frame range with range low pivot number 1 over here, range high pivot number 1 over here, and then the second range low pivot number 2 over here, giving us 3 pivots and a high probability range. Now we can see that we see multiple wicks to the downside being created. And what are these wicks indicating? They're indicating that people that were panic shorting or panic selling GMT, that short and sell pressure was being absorbed by the bigger players that were then accumulating their long and buy positions. And that is why we see these big wicks to the downside. Now that absorption was leading into a first test of the mid-range, a second test of the mid-range, and then eventually we pump it above the mid-range over here. Now we know that as long as the mid-range then holds, we should expect a pump towards the untapped liquidity pool above the range high. Now what I also do know is that many people are looking to long the perfect retest of the previous resistance area over here. We do not only have the perfect retest, around the perfect retest we also have this order block on the 4-hourly time frame. Now if we then zoom into the even lower time frames over here, what can we see? Is that around that perfect retest area, we have this low over here. Now what makes a lot of sense in my head is that many people are identifying this previous resistance area that should be turning into support. They long the top of the support area. They now also see this wick to the downside from that support area. So you also have people market longing GMT over here. Where are these people putting their stops? They're putting their stops beneath a local low, beneath this low, or beneath this low over here, the smaller low over here. Now, why are they not using this low to cover their stop loss? Because if they are targeting the range high liquidity pool, look at what happens to the RR. It only offers an RR of 1.52, and that's not worth it. But if they use a tighter stop, then the RR becomes approximately 6 or about 4.65. Now, we know that retail traders are greedy creatures. We know that retail loves to long these obvious retests of this obvious support or resistance level. Now that means that we have identified where the liquidity currently is resting, which is beneath this low over here. Now that we have marked out the liquidity, we can see that the liquidity is exactly aligning with this bullish fair value gap on the daily time frame over here, high probability bullish fair value gap. And below that bullish fair value gap is where we have a high probability bullish daily order block. Now, why is this a high probability order block? Because if we zoom in, we can see that that order block swept the liquidity of the previous bullish daily candle. And we know in order to get a high probability order block, the order block needs to sweep either sells the liquidity for a bullish order block or buys the liquidity for a bearish order block in order for the order block to be high probability. The order block also needs a bullish fair value gap above it on the exact same time frame, which we do have over here with that bullish daily fair value gap, and that liquidity low is providing a beautiful inducement above that order block, which is the third requirement in order for the order block to be high probability. That means that we have ourselves a high probability daily order block over here that aligns below the mid-range. Why do I love it that it aligns below the mid-range? Because we don't like to play these perfect retests over here. We like to play the deviations beneath those key range levels, then reclaim it and then send it higher towards the range high liquidity pool. So anticipating a potential deviation over here beneath the mid-range means that we can identify a potential limit entry over here at the top of that bullish daily order block, stop loss beneath the bullish daily order block, and our first target being the range high liquidity pool, offering us an RR of 3.41. And we can see that around that area we also have beautiful confluence of the 100 EMA, 200 EMA and 200 moving average on the 4-hourly time frame. So we are looking at a potential high probability trade setup on GMT right here, given with exact entry, exact stop loss and exact a profit target. Thank you guys for watching, and I'll catch you guys on Wednesday's video. Ciao, ciao!